Hmm. Hey, there we are. All right. What's going on, guys? How's everybody doing? All right. Let's get our charts all set up here. Taking a look at that supply and demand zone scanner. And a little bit. Okay, so market sentiment to the upside a bit. Looks like that NASDAQ switched over. We took a nice trade on the NASDAQ yesterday. And it is back. It's back on there. So Nasdaq and the S&P both back on the scanner, but take a look at what we've got. So this is a downtrend. We are in a major downtrend here on the Nasdaq on that high time frame, and the scanner is picking up all of the. Let's get. Let's turn this off here. We're not ready for the opening range yet, but the scanner is picking up on all the momentum that's going to the upside. See, we've just we broke above, then we broke below, then we broke back above on that intermediate momentum indicator, right? The CCI indicator, and we are in an uptrend on that middle time frame, but this here, see how we are range bound here now on that middle time frame, right there and there. So we're range bound on that middle time frame. And Gary, what's up, my friend? I work 1 day a week. I have to leave. Oh, okay. Yeah, you got it, my friend. You got it, Gary. It'll be on until midnight tonight. The spooky deal goes until midnight, Gary. um, yeah, no problem, Gary. If there's anything that you want me to make for you too, don't forget to join the live Facebook group too, because I put a lot of bonus videos in there, and you'll get all of that in the TrendCloud emails and stuff. So yeah, no worries if you got to go. Do you have a PDF on how to use TrendCloud? Oh, right. You just yes, Hitch. I will send that. Oh, it's actually in the free trade plan, Hitch. So if you go sign up on that free trade plan, I'll put the link in there for you, buddy. Okay. Whoops. So that's what we are looking at, guys, on the NASDAQ. So the scanner, this is really cool. The scanner is actually picking up this sideways movement here. It's saying, wow, we've got a lot of force to the upside. I know we're in a downtrend, but we're cycling up. So we are correcting still. This corrective move is now turning into a sideways movement inside of that high time frame trend cloud. You can see right in here, right? So right inside here, NASDAQ is going sideways inside of that high time frame trend cloud. And what you can do if you double click onto trend cloud here, and I can actually take the 4-hour trend cloud, trend cloud and put it on the 1-hour chart here. Let it do its thing, and it will. So what happened here? Why is it? Oh, there we go. Okay. So you can take that 4-hour trend cloud. So now you see I've got the 1-hour chart. Got the 1-hour chart here with the 4-hour trend cloud, and you can see it's going sideways inside of that 4-hour trend cloud. And so it's just a guide. It's telling you, okay, well, we're going sideways, and you can see that you can see that it's sideways, right? So let's just put that back. I just wanted to show you guys. There we go. That's what I did before. I just want to show you guys that that's what you can do. Yeah, so we are going back and forth on momentum as well. Probably best to stay away from the Nasdaq because on the opening range, yeah, it's pretty powerful. It's pretty powerful, Hitch. So on the opening range, um, you really you're not really going to know which direction it could break the upside, it could break to the downside. We don't have a enough information to really take that opening range, right? So this is yesterday. Okay, this is yesterday's opening range right here, and you can see what it did, right? It broke to the upside, broke to the downside, and again to the upside, again to the downside, sideways movement. Okay, so just by looking at your strategy as well, and Gary, this all comes with your TrendCloud system. Okay, you're going to get all of that. So with the opening range breakout, the strategy itself is going to tell you what's going on. Here we are today. This is us today, right here, 9 o'clock. So we've got to see. We've got the opening range breakout from yesterday that we never really broke out of, and then we've got this. We've got this here. We've got this sideways movement. Here's the top of the swing. Here's the bottom of the swing here in this sideways movement. It's really it broke a little to the upside here, but look at where the real swing is, right, guys? See that? So all of this is inside of the larger swing. And I go over that in the course on how to follow the price action step by step. And Hitch, just to let you know, the core, everything is on sale until midnight tonight. Okay, buddy. So if you want the course and the whole TrendCloud system, then just use Spooky, and you will. Okay, awesome, buddy. But the guy stopped streaming before. Okay. It's funny. I saw that on another stream, but people were pasting their charts into the chat. Well, if you want Hitch, just go to the TrendCloud website and you'll see it. I'm going to post all of that in the chat for you guys. Let me go and do that right now. Well, I'll bring that up here and I'll post that. Make sure everybody's got that because tonight, that's it. Tonight, that's it. It goes bye-bye tonight. Let me go grab that, get the document. What do you guys want me to look at? Do you guys want me to look at anything specific for you? Any stocks, anything like that? Okay, here is. Yes, I will do that. It's right. It's actually right on the. Here we go. Oops. Make sure that works there. Bring it up. Yeah, there you go. So when you bring this up, guys, right here, when you bring this up, you can just click onto here, click that green button there. Okay, it'll bring this up, 1497. Just type in SPOOKY. Just type in spooky. And there you go. Okay. And that is, and then just put in your info. Make sure you put your TradingView username in there so I can grant you access to everything. And then just hit continue. email, and then there you go. Okay. You can use PayPal, you can use whatever you need. And that's what you would do. All righty. All right. I'll put the trade plan in there as well so that anybody coming in here, there's your trade plan as well. Let me see. Yeah. Okay. So, yep. So there you go. Oh, no problem, Hitch. I was just putting it out there. No problem, buddy. No problem at all. Um, so, that's what's going on here with your with the scanner. Okay, so understand that every indicator, no matter where it's from, a TrendCloud indicator, whatever indicator is out there, even this, Richard Lambert invented the CCI indicator back in 1980. They're mathematical equations, right, guys? They're indicators. They are not. It's not a crystal ball, you know. And just using one indicator or one strategy, it's not going to give you the full picture, right? You have to use everything together to really put your process together into a system, right? And that's what you want to run on your charts. You want to run a system, not just looking at one, not just looking at one indicator. It could be very convincing, when you see something happen a couple of times, like if you just look at, look at here. This is a great example of, on the opening range breakout. This is a great example of why we don't trade the actual breakout itself, because broke to the upside right here, broke to the downside. Oh, actually, it went break to the upside, break to the downside, and then it broke a little bit right there. And then it broke to the. This is like what, 1, 2, 3, 4, 5, 6, 7. It broke above and then below. It broke above and below like 7 times. So that's why we trade the retest, and we don't even just trade the retest, right? We're not looking at one chart, right? We're looking at the full picture here. We're looking at the full picture here. We're looking at our zone scanner. We're looking at the trend. Are we in a corrective phase or an impulse phase? And then we're looking at that middle time frame to see if we're above or below CCI, right? Positive 100 or negative 100. So ideally, what you want is all the colors to match up, right? Look at this. High time frame, trend cloud is red, candles are red, right? Then you want to see that you're in an impulse phase. So you want a red stochastic. You want to see a red momentum filter. Red, red, and red. Okay, great. Let's match those colors. Then you go here, okay, and you see you're in the cloud here. Red candles, trend cloud is red, and also in a downtrend. CCI below the red line. Okay, below the red line there, below negative 100. Great. Now you're ready to go to your strategy or start looking for supply zones, right? This is what we did yesterday. Here's the trade we took yesterday. Go look for your supply zones. Okay. And that's what you would look for, right? There you go. Boom. Pulled into that bull trap, right? Pulled into the bull trap. We said we've got all this force to the downside here. All this force to the downside here. Everything was in our favor. Everything was in our favor. Right? right from the get-go. Just started a hook down. Right there. Just started a hook down. Momentum is down. Right? Where's my line? Right here. Where are we? There we are. Okay. And this is what, so, and CCI and trend, okay, were up on your middle time frame. And that was the hesitation, right? That was the hesitation. We were like, we better make this trade short because this is an aggressive entry, right? And look what happened. It came up into that bull trap and gave us a nice move right to the end. Remember this, Gary and Hitch? Remember this? We hit that bull trap, and then we went short right into the bottom part of our opening range, which was also the previous day's open. And now we're back into that. So this zone up here, we actually found the top of the sideways movement before it even happened. ANH, Anheuser-Busch. Hey, what's up, Price Action Dan? Price Action Dan, what's up, buddy? Did you have time to look at no, which have yeah, I should have a Discord. I think I remember you saying that before. I think you should I should put together a Discord. I don't know how to do that, okay? Don't laugh. I don't know how to do that. But I hear a lot of people asking for Discord, so I'm going to look into that, Dan. I'm going to look into that. The prop trading firms I'm familiar with, SMB Capital, T3 Trading. I think there's Maverick. I heard of Apex, like the FTMO challenges. Yeah, FTMO challenges. Yeah, I really make make it a Zoom. Yeah. I think it would be really fun, Dan. I think it would be really fun. I would love to do that um, and put something like that together. I kind of just got started with everything as far as going live, and building out the website and building out the membership area. It came out awesome. Like everything came out awesome, but it took about a year, like to put all of it together. So yeah, I definitely want to do that. The latest technology either. Yeah, man. I tell you, I look at some of my cousins who are like 10, and I remember them being babies and just like working the phone, and I'm like, holy cow. Like I'm Gen X, so I was like, we were the first to actually use a computer in the home, you know, and understand, what was going on there. And now kids just got the computer right in the palm of their hand. It's crazy, dude. It's crazy. But yeah, into the prop trading firms, guys. The prop trading firms, in case anybody's not familiar, they will sort of give you a test, right? And they usually have a course that they put you through. And if you pass the test and you go through their training and they see that you're using their strategy properly, they will fund you money that you can trade. But what's your experience with the prop trading firms, Dan? I mean, I have heard some crazy, very strange stories. How they kind of force you to scalp. Like some guy at a I went to a convention, and this guy was trying to tell me. He was talking to me about Apex Trading, and he's going through their prop trading firm. And I was working with him. And he said, but they're forcing me to scalp. And I was like, they're forcing you to scalp? He's like, yeah, you have. And he was trying to explain it to me, and I just didn't understand what he was explaining. So his knowledge of their system and what they wanted him to do was still a bit rudimentary. So I couldn't quite understand. But I've heard similar stories from other people about prop trading firms and how they just they 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 kind of pigeonholed you into a strategy. And so I would say avoid prop trading firms that make you scalp, okay, and go with the ones that are going to be more open to, hey, you can use any strategy that we approve, and we want to make sure you're competent at it before we let you trade our money. And that's more reasonable. That's understandable. So and the biggest thing is if you're using the whole TrendCloud system here, um, you've got something that's already back tested and making money. It's optimized. Even the TrendCloud itself, the numbers here, these are all adjustable too, guys. Okay, so your TrendCloud is adjustable, and you can mess around with that and put it onto the digital trading journal that you get, and just back test, the numbers that you want to use, and you can just eyeball it. Like, you can eyeball it at first on that higher time frame and just see, is this thing pulling back into the trend cloud and impulsing down? Yeah. Yeah, mostly, right? Here's a great run. Sideways movement, breakthrough structure, pulls back into the cloud, pulls back into the cloud, goes extended, breaks back above the 50, recalculate, and then we got that sideways movement again. This thing loves to go sideways, right? NASDAQ loves to go sideways and then break through some structure, right? And here we're coming into that sideways movement here. And look at that move down. I mean, it guides you. I mean, look how easy. I wasn't even looking at that. Just sideways movement, right? Oops. Sideways movement. Okay. Right here. Breaks through structure right there. Trend cloud turns red. Look at the signals we get. That from here to here, this is the 4-hour chart, guys. This is from September 20th all the way to September 28th. This is 8 days. This is 8 days of profits, okay? That you're trailing down, like that. I mean, this was a really long move, but trailing this thing down, it would have stopped you out right here. I would have trailed this thing down, candle by candle on the 4-hour chart, and it kind of took you out, right on the 27th, right? We broke through structure actually right here on the 19th, and we went all the way to the 27th. Getting in on stuff very early is so important. There's your sideways movement here, broke to the upside, and we had from here October 9th, right, all the way to October 12th. That's, again, you got about, these trends are lasting about a week in one direction. Drew a black plus. Oh, okay. ANH. Yeah. Let's check it out. Hitch. ANH. That's a stock. Let's go to the stocks. ANH. Anheuser-Busch. Anheuser-Busch? What is the JSE? Anheuser-Busch. ANH. Oh, you're in South Africa, right, Hitch? Is that the South African flag? Um, Gary, where would you go? Where would you go? Where would you have gotten out, and why? Where would you have got out and why? Oh, nice, nice Hitch. All right, right on. Um, I will show you. I'll show you, Gary. I will show you, that's also in the course. But I will show you today how we trail that stop and why. Wow, look at. Is this the one you want, Hitch? This one here? ANH, the Anheuser Busch. Let's go to the daily chart. Okay. Okay, yeah. Look at wow, that's really clean with that sideways movement. That's real clean with that sideways movement there. Let's do like this. So you can go over to your so when you draw a rectangle out, guys, just double click, right? And you can take off extend right. I like to put extend right on because I'm using it to draw out my supply and demand zones. But if you take it off, right, and you say gray, it's a great way to draw sideways movements like that. Pretty cool stuff. And, what do we have here? Right? We've got that break below structure. You're looking at the 1 hour. Yep. There you go. There's the crossover again. There's that crossover there. So let's just look at the full show here, shall we? Let's get rid of that. Recalculate. 4 hour, 1 hour, 15-minute chart. That's our 3 time frames. That's what Mr. Alexander Elder uses as well. If it's good enough for Alexander Elder, it's good enough for Chris Giuliano. Okay. So Anheuser-Busch, so it's been going down for a while, right? And look what it did. It went 5 waves down. You see that? Candles turned ice blue. And what does price want to do when it becomes extended? It wants to break above and recalculate and then choose a direction, right? And you can see here, it went sideways. It went down 5 waves and broke above. And we're just starting to break above all this structure here, right? We're just starting to break above all this structure. And what we've got here, rally, base, gap down, right? So it's wanting to fill the gap, and it filled the gap right here, right? Filled the gap right there. So, and then it's got another rally base drop right here. So it's liking this area. This is the turnaround point on that high time frame. And it's part of that sideways consolidation. It makes sense, right, guys? It consolidated for a long time. Got a nice rectangle here. Look for those rectangles, guys. Rectangles are very powerful patterns. This is a classical charting pattern that I actually learned from Mr. Peter Brandt. Good morning, Kazi. Good morning. Good to see you. Too early to go long. Yeah, came out with a good trading update. Awesome. Yeah. So that's Peter Brandt taught me that. That is a classical charting pattern that I think that's really all he uses. And he's on those very high time frames. So I incorporate all of that into the TrendCloud course. And It's very interesting stuff. The longer the consolidation on the high time frame, the longer that rectangle, um, when you get a breakout of something that goes like for weeks and weeks, I believe he likes it to be at least I think 4 to 6 weeks long in that consolidation. Then when you get a breakout, right? So that here's that gap down breakout. It didn't quite. It just sort of peaked below, right? It just sort of peaked below right there, and retested, that area, and then it broke below and moved down, and we got that nice move down, and now we're returning. Yeah, Hitch, a little too soon uh, to go long because high time frame here. Um, it did just get the. Let's go to the daily. Yeah. So the daily chart. Daily charts are better to use, guys, for stocks because there's that there 8 hours in a day. So much better to use the daily chart. And we're in a downtrend on the daily. So stocks, we use the daily, and that's the situation we're in. So we're still kind of in that corrective move, right? It's pulling back. We made a move up. It hit that supply zone. Okay, hit that supply zone, and now it's pulling back. We do have momentum on that middle time frame, right? We do have that middle time frame momentum to the upside that broke, structure here. So we've got a lot of force on the middle time frame to the upside, okay, and it's climbing up into this area. So you'd have to take a look at your fundamentals on Anheuser-Busch and and see if they're going to drop that woke agenda that didn't really work out. That didn't really work out too well for them, did it? It really didn't work out too well for them. But yeah, this looks like a mess, and it does like to go down about 3 waves or so. And look at this sideways movement. 1, 1, 1, 1, 1. Here we go. 2, 3, 4, and sideways, right? This whole thing here. Sideways movement right there. So that's the story on Anheuser-Busch. We're in a sideways movement. Hitch, I would wait. I would wait on that because look at that weekly chart. There's a real clear picture right there of the sideways movement, right? So it did on the weekly chart, it did break to the downside, not fully right there, right? So we're in a sideways movement. We're in a sideways movement, and we got to find some direction first. We have to find some direction. And we have this right here, this weekly demand zone rally, right? Rally, base, rally, right? So we've got a rally, base, rally, 2 basing candles right there. Looks like it almost came down to that area. But right here, this is going to bounce around. And it likes to bounce around. Anheuser-Busch, it likes to bounce around. I mean, look at it. Dur, 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 dur. Very long peaks of consolidation. So, you put your fundamentals. Does the green arrow up show? Yes, it does, Hitch. Yes, it does. Green arrow, possible entry. Remember, it is a confirmation type of entry. So Anheuser-Busch, look at it, dude. Down, you got down arrows, you got up arrows, down. When you're in that sideways movement on anything, guys, stocks, futures, Forex, when you're in a sideways movement or you're trading an instrument that loves to go sideways, those types of entries don't work very well. And this is a perfect example. The TrendCloud arrows form when you're in a trend, when you're starting to trend. So what you would do is you would look for, okay, we broke above the 50, we broke above the trend cloud. Here's the crossover. We pull back, get a signal, and does that break structure? Well, it breaks right here. Now you can start looking for more arrows and more demand zones to go long, okay? So again, you have to use it all together. Here we've got here, we pull back, we don't get a signal, but we do break to the downside. It comes back up and we recalculate, okay? So Anheuser-Busch really loves to go from extreme to extreme. Kind of difficult to trade, but definitely you could use options on something like that, right? And trade those iron condors, right? Trade those iron condors on Anheuser-Busch maybe, or any type of sideways option strategy would be very good for Anheuser-Busch Hitch. So that's what I would recommend with Anheuser-Busch Hitch, some kind of option strategy that uses the sideways market. Okay, I don't trade options, but I know about it. I know enough to be dangerous. So yeah, a spread like maybe a vertical call spread, vertical put spread, something like that. Iron condor. Okay. What time is it? Whoa. Alrighty. Let's get a moving. 4-hour chart. Let's go to the S&P, guys. Woo. Major downtrend there, right? So we're still in this downtrend. There you go. There's your trend cloud signals right there, right? Because we're in a trend. This the S&P futures likes to trend a little bit more. Sorry, Dan. Yeah, I did. That was a long one. Hold on. Let me. Okay. Gotcha. About the prop trading firms, right? So the basically everything is simulated. They do not give you real money. Right. Prop trading firms, right? They do everything simulated first, 10, 25, etc. You usually have two stages where you can prove you are profitable, right? Make 10% on the account. Do not lose more than X amount of dollars per day, right? They're trying to get you on a regiment, right, at those firms. If you prove to be profitable and pass the challenge, you can trade, again, a simulated account where you get to start with usually 80% of, well, okay, so you take 80% of the profits, and then I guess it moves up from there. Yeah, how do they make money, Dan? They're making money. They make money from traders who blow up the challenges, and sometimes they will copy your trades. I didn't know that. Oh, okay, that's interesting. If you are a bad trader, you will fail again and again and again. But if you're a good trader, this is the easiest way to work with a capital that you don't have yet. Yeah. Okay. So, what do casinos do, right, guys? Casinos have games with rules that are in their favor. That's why the house always wins, right? So the casino is actually doing what you're doing at your trade desk. You're trying to come up with an edge. You're trying to make some rules that are in your favor for the market, to gain a little bit of an edge so that those random outcomes are in your favor. And that's all mathematics, right? That's mathematics. It's logic, and and that is what they do. Thanks, Dan. That was excellent. That was excellent, Dan. Really appreciate that. Um, yeah, a little scary, right? That's a little scary, guys. So what I like to do is, you put TrendCloud in the hands of the right people. Guys like us, like we're hanging out here. We're in this live room. We're having discussions about um, the process, right? You put TrendCloud in the hands of someone who really loves the process, and they're going to make money. And those guys, if they're able to bring that with them into the prop trading firms, you got them beat. You've got them beat, guys, because what are they going to do? Say no, you can't. No, you can't win. We already know it wins. We already know it wins. We already know it works. So if you wanted to go into a prop trading firm, you can show them your data. Okay, you can document all of that on the digital trading journal that I give you guys, and you bring that to them. What are they going to do? They're going to say no. Give me a break. They're not going to say no. They're going to be like, whoa, okay. But off of if they're making money off of people who are failing, like, oh, you didn't pass the challenge, sorry, you got to go through the course again, and it's another, I don't know, how much does it cost, Dan? How much does it cost? I think it's like a $5,000 buy-in or something like that. They call it a capital contribution. So you got a capital contribution, I think about $5,000 or so. Maybe you can get away with $2,000. I know. What was it? T3. Well, I think it was T3. I was talking to the guy over at T3 Trading, and he's like, yeah, maybe for some people, capital contribution $2,000, but the $2,000 or the $5,000, the capital contribution, okay, is basically that money has to stay in that account, I believe, for a year, and it's a buffer between any failed trades that you make and their money. So they have this $5,000 capital contribution buffer in between their money and your failed trades. So it's got to be enough money to handle the drawdown. So basically, the strategy I give people when they are trying to get into the prop trading firm is use 1% of your total current capital contribution value. So if your capital contribution is $5,000, you got to use 1% of that $5,000. Okay. If it's 10,000, 20,000, whatever. So 20,000, $200 risk. That's it. No more than that. So yeah. Okay. Let's turn on the opening range breakout here tool. And there we go. Okay. So we got the full opening range breakout that has formed, and it's a big one. All right. We're in a downtrend, but we're in an uptrend on the middle time frame, and we are momentum's to the upside. Okay, and we are hooking up. So it looks like. Do you see what TrendCloud is drawing out for us here? See what TrendCloud's drawing out? Think about this. You're in a downtrend. Number one, high time frame, downtrend. Here you go. And you're still you came into the cloud, broke down a little bit, right? So we impulsed down a little bit, but we never broke any structure. We didn't break here. We didn't break here. We're still in the trend cloud, bouncing back and forth, just like on the NASDAQ. We saw it on the NASDAQ, right? It's a little stronger here on the S&P, but we are still right up in here. It came right back up into this gap fill, right? Came right back up into this gap fill. Turn that red and just double click onto your square and hit extend right. Okay? Very easy. So we're coming back up into that high time frame, and we took advantage of that here, I believe. Yeah, right here on the 26th, we took that trade. We made money on it. We saw it, right? Because in this situation, we had everything lined up, right? Downtrend, pulling back into a supply zone. And where was that intermediate momentum on CCI? Below negative 100, pulled back shallow into that blue shaded area, and the big rip down, right? Came down, pulled back up, right? That's represented here. Pulled back up, did not pass positive 100. So what did we get? We got the move down. And it did it again, pulled back up into the trend cloud, impulse down, pulled back up, went a little further, right? Right here, went a little further, big impulse down, right? Impulse down. Then it went extended. Price went extended. So it wanted to break above positive. It wanted to break above the 50 simple, right? Recalculate. And what's it doing? It found support at the trend cloud. Okay, so it broke up. Momentum right here. Nice and strong to the upside. We're correcting up. Right here. We're in that corrective move up. Found support and just broke above. Okay, so that's a sign of strength there. That's a sign of strength there. And now we're pulling back shallow into the cloud. So we've got a lot of strength here. Okay, it's pulling back into the trend cloud, middle time frame with momentum to the upside. So we've got strength to the upside in a downtrend. You hear that? Strength to the upside in a downtrend. So that means this corrective move might correct right back up into here. All right. So TrendCloud is giving that to us every step of the way, right? It's telling us exactly what's going on. So, where are we at here? What is, let's erase all of this. What is the story? Well, I bet you we see some sideways action here today. Or it's either sideways or we're going to find support down here again. Okay, perhaps back down to here in the previous day's opening range. Right. So this is not a trade. We want to see more information in our favor. Okay. So that's what we need on that. We need more information. Let's go over to crude oil. Go to the micro crude. And what do we got going on here? It's not picking up on the scanner. It should start picking up on the scanner, though, because we've got, look what we got here. Double click onto that opening range, 5 minute, 5 minute chart. So we have just broken out to the downside. Very nice. Okay, on crude oil, we're in a high time frame downtrend. Okay, nice momentum to the downside. Nice momentum, impulsing down. Okay, we broke through some structure, broke through previous month's open and heading towards the previous day's low. Heading towards that previous day's low right here. Wow. Okay, let's start looking for start looking for some traps here. Yeah, look at that. We really want to break through this stuff, which we did. We broke through that. That's already broken. We want that now. Want to break through that. It's so strong it might not come back, right? But if this comes back on the micro, if crude oil comes back in here before 11 a.m., we've got so we might get a 10 a.m. reversal back into the opening range here, guys. Oh wow, really, Kazi? Yeah, that happens sometimes. Um, I would use, you know what, guys? I've had a really good experience with the desktop version. This here, the desktop version of TradingView. If you're on the web version, or maybe, I mean, that doesn't sound right. Maybe on the web version, it might be less lag, right, Kazi? Because this is the desktop version. Maybe there's more lag on the desktop version. I'm not sure. But you can do more with it. Like you can open up another tab, put this tab on the screen, on another screen, and and look at your charts a little differently that way. Here we go. Look what we've got here. We've got this spike bottom reversal going on here. Let's take a look on that higher time frame here and see. Yeah, okay. Four-hour chart, right? Look where we're at. 4-hour chart, right? We're in that high time frame demand zone. It's been in there for a while. But it is a downtrend, and momentum is with us to the downside. So you've got the green light. So we're real low. We're real low on the curve. We're low into that area. So we really want to see some break of structure here to continue short. But it might pull back up into the opening range and then give that to us, right? So I think what we're looking for something like this, right, guys? That's what we're looking for. Hey, great. I'd take the risk on that. I'd take a 1% risk on that all day long. That's the story with crude oil. Let's set it up. Let's go to the risk manager. Jump on that risk manager tool. And let's set up our crude oil trade here. Yeah, there is a lot of lag. Kazi, holy cow. Wait, there is a lot of lag. Whoa. Whoa, what is going on? I wonder if there's too many indicators on the chart. Look at that, Kazi. Did you guys see that when I started erasing? If there's a lot of indicators on your chart, you may want to. Oh, here we go. Okay, I'm just going to go from the bottom to the top of this consolidation here. 1%. That's 2 contracts. That's the full range there, guys. This is happening pretty quick, so. That's your opening range. There we go. Okay, so 2 contracts. See how important it is to be fast? Nice. So we're getting a nice fast and furious pull back into the opening range on crude oil here to the downside. We are low on that high time frame. So we're in this high time frame. We're in this high time frame curve zone, right? Or market edge, and that's usually where we get the bounce, back to the upside. But we can only trade what we see. Maybe this will give us enough of a push. Let's set our targets: 2-1, 3-1, 5-1. And we'll say, make that large, put that to the right. Okay. Yeah, so that's a pretty wide 2-1 range there. Let's go to the 15-minute chart. Ooh, boy, that looks kind of, on the 15-minute chart, that looks kind of messy. Yee. Egads. Oh, boy. I don't like the look of that. I don't like the look of that on the 15-minute chart, guys. Here's the right, here's the zone right here on the 15-minute that looks like it makes sense. Yeah. Oh boy. All right. Look, we'll take a small chance on this, okay? We'll take a little chance on this, but oh boy, I don't like that. Let's put Fibonacci on there. Swing high. Yeah, I don't like this. I don't like this one bit, guys. I don't even want to simulate that. I don't even want to simulate that because look where we are here. Look where we are here. We're in consolidation on that 15-minute chart. Okay. Take this off for a second. We're in this 15-minute consolidation. And I don't like that one bit. I don't like the look of that one bit. It might, it might come up in here, but I don't really see, there's no formation in here that broke this structure, okay? It kind of came down. I think we're going to see a lot of bouncing around here. So, Kazi, I would, if you're trading live, I know you trade crude oil live, I wouldn't risk real money on that. I would wait for this up here, because look at that move out breakout. Look at this move out breakout, right? It broke here, it broke here, and then sort of found resistance at that breakout level, made a nice move down. But I don't see a formation here that broke through this major piece of structure here. It's a little too wishy-washy. If you're going to take this, then I would really do it towards the top here. Where's that? Here's a 618, 786. There we go. Okay, you want to take the middle of this. You want to take that right in the middle. Put that open range back on there. Go back to the 5. Okay. It's coming back in. We'll do that. We'll see what we get there. 1 minute zone might work better. Yeah. Yep. Okay. Well, We'll see. I don't want a big zone on there. So there's that. So that's what we'll do. We'll work it like that. It did break below, but we are in that higher time frame, but the 5-minute chart, remember, the higher time frame you go, the more significant. So we'll see how this pans out. But we really don't want to struggle to find stuff, right, guys? We don't want to struggle to find stuff. We want it to be super clear. I just got a new keyboard. It's messing me up a little. We want to be super clear as to where this is going. Okay, so very cool, broke through, pulling back. Okay. We'll see what happens here. We'll see what happens here. But that's just a lot of, see all the wicks there? That's just a lot of consolidation. Pulling back into that cloud, really trying to find that resistance area. We've got the momentum here. We really have the momentum here. So that's what that's looking at. Let's look at natural gas. Wow, yeah, look at that. Natural gas just bounced out of that consolidation there. High time frame, making a nice move to the upside. Got confirmation entry signals on there. So we're in an uptrend on the high time frame. We're impulsing up. Momentum is with us. And we have, whoa, look at that. Now here, now look at this, guys. Now, isn't this a better trade than crude oil? Right in here. Is that not a better trade? That's a much better trade. Candles are green. TrendCloud is green. High time frame. Impulsing up. Momentum is up. High time frame. Middle time frame. We just got the crossover. TrendCloud is up. Candles are green. We're above positive 100. Great. Start looking for a strategy. Start looking for your formations. Opening range breakout on the 5-minute. This is a way better setup right here than the crude oil setup. See the difference there? How much better that looks? Drop, base, rally, breaks through the opening range, breaks through structure, right? And we're heading high time frame. There's your high time frame, right? High time frame curve. So we should see some kind of turnaround from there, right? Don't you wish every opening range breakout happened just like this? You would take it all the time. You would take it every single time. This is rare. This is very rare, right? And so this is the 5-minute drop base rally, and it's also right down here. You've got a lot of support. You got a lot of support here. Okay, so on that middle time frame, right here, that's where it intersects, right? Make it a different color. So there's your high time frame or your middle time frame and low time frame demand zone. That went really far. So for that to pull back into there, what are we doing here? Yeah. Still Still climbing, right? Still climbing. Definitely want to take the top of that. It's hitting that 618. It's hitting that 618 retracement level. So we're inside of the opening range right now, and we'll see what happens. Okay, we'll see what happens. But again, momentum broke to the upside. We don't want that. It broke to the downside, and now it's pulling back sort of in there. So little intermediate strength to the upside there, and that's what TrendCloud has given us, right? So it's given us great information. It's giving us great information here. There we go. You see, guys? Do you see what I'm telling you when I said that's a pretty fast candle? It came up there, it just tapped that sell order, right? It came up and just tapped that sell order there. Let's make this red up here. So yeah. Well, at least now on our risk manager tool, let's put that back on and just adjust everything here. Come on, risk manager. Wow. Look at that. Yeah, there we go. 2 contracts. Let's adjust it, because you'll see your targets. God, it just missed it. But you'll see your, so that we can actually trade 4, but I'm going to do half of that because this is not really liking that. But there you go. So now look at your 2-to-1 and your 3-to-1. So don't those targets make more sense? You've got your target right down here. Okay. Oh, no, I'm sorry. Yeah, this is yeah, that's a better supply zone there. That's a better supply zone there. That previous days on the 15-minute chart, this looks a lot better. This is pretty fun, right, guys? I told you, man, when you saw that pullback into that opening range, this is kind of messy. Not really liking it there. I mean, look at it on the 15-minute. Does that look good to you on the 15-minute? That looks pretty friggin' scary to me, right? But we'll take a small chance, guys. We'll take a small chance on it, right? We usually do 200. We'll do half that, right? And that's how you approach this. It's like, okay, well, it's looking better, on the 1 minute. Kazi said 1 minute. What's 1 minute looking like here? Let's refresh. Yeah, sure. Yeah, looking better on the 1 minute, right here. So let's watch it. Let's watch it on the 1 minute. There we go. We're in, and you'll see, so on the 1 minute, right, we're actually your stop loss looks like it's about here, right? But this is the full structure of it all on that 5 minute chart. So there you go. Definitely want this to be short-lived here, short-lived here. So we just got in, and we've got this drop base rally down here. Okay, so that would be, if this wants to continue to move up, it's probably going to pull down into back down into here. And remember, we're in that higher time frame. We're in that higher time frame demand zone. So maybe, maybe you want to get out here. Maybe this is a good target area, right? 1-to-1. There you go. So there's a little 1-to-1 move right there that you can set yourself up for on that 1 minute chart. Well, that was a pretty good guess, right? Right in between that. I've seen that happen so many times, right in between the 786 and the 618. Yeah, here we go. We'll see if we pulled right back into that high time frame demand zone, and we are pushing back. We'll see what happens. Okay. But did you see how I reduced the risk? I saw all of that, okay, kind of messy looking. Here's the range, right? Here's that range bound on the 1 minute chart. Formations like supply and demand zones, okay? Supply and demand zones, support and resistance, price action, all of that is always going to be more significant on the higher time frames, right? So when you're looking at the 5 and the 15-minute chart and you do something like this and you drop down to the 1 minute to find the zone, you really should be looking at 1-to-1 ratio target, 1.5, because it happens much faster. Okay, so it all happens much faster. And for it to go from here all the way up to here and then down, on the 1 minute chart, we're really looking at this, right? We're looking at all this here, this consolidation. We're looking at this consolidation here. And where's your 1.5? Right about there. There's your 1.5 move. Because on the 1 minute chart, you better be careful on that 1 minute chart. So that's how you can reduce the risk and play this out. Oh my God. It just pulled. This is 1 minute chart action. This coming weekend, my project, I'm going to back. Oh, nice, Kazi. Yeah. I made you the video. I made you the video. I'm glad you reminded me. I made you the video, and I'm still editing it. So I'm gonna put that out for you. Yeah, did you see how fast that reversed? How fast that reversed, guys? So so taking something on the lower time frames, it could reverse like that, and we're gonna leave this alone, just like that. Take a small risk. If it works, hey, great. But we are coming back into that area right here. So does it go a little bit above, or does it just go range bound? That's really the full length of it. Okay, that's the full length of it right there. I didn't mean to move stops around or anything, guys. You shouldn't be doing that. I'm trying to kind of teach and do this at the same time. But look, if I'm going to take a risk on this, I want full structure. I want my stop over the full structure. And if it takes me out, then I'm okay. I'm okay if it takes me out, but I don't want it to take me out short on the lower time frame. So I'm putting the stop on that 1 hour structured candle, the 1 hour wick of this candle here. And we'll just, it's not our job to figure out what's going to work, what's not going to work. We're just following a process. We've got downtrend here, right? And on the high time frame, we're correcting back up into the trend cloud. Where's that corrective move going to end? Well, could possibly end right here, or it could possibly end on this very nice right here. This is a much better zone right here. It looks like that's what this might want. Price might want this because the move out and the breakout, the move out breakout here is pretty nice, right? So it's a better looking zone, better area. And it's also inside, right? It's also inside of our high time frame trend cloud. So this loves to pull back into the trend cloud on the high time frame, make a move down. Pulls back a little bit past the cloud, but didn't go past our line in the sand. Big move down. Okay, so it took us out. See that? What did I tell you guys? What did I tell you from the very beginning? Yeah. What did I tell you? Because I told you, right? I called it. I was like, this is not looking good. This is not looking good. So we took 0.5% risk on it, right? Because hey, who knows? But this is the better zone. This is the better zone up here, and this is what I would much rather take the risk on. Here we go. Better zone. Trend cloud support, trend cloud resistance up here, right? That's actually also consolidation. Let's take a look. And we're starting to break above. So now now it's like, okay, where is the corrective move going to end? Where's the corrective move going to end? Because now we're in a correction on the high time frame. Momentum is with that correction, and we're starting to break above here. So aggressive entry, but it's an aggressive entry. Why don't we, take? We could take that. That's just really wide. That's just a little too wide to take it all the way up here. We can stick with our entry here, right? Maybe reduce it. Reduce that two contracts, and there we go. Okay. Take the full length there. Whenever momentum starts going against you on that CCI, try to take it a little closer, right? When you've got some consolidation, but we really want that entry. So we'll see. Let's check it out. Will it get there? Or we can do confirmation entry, right? We can do confirmation entry here. Wait for this to pull back, at least hit this 50%, and then take some kind of confirmation entry. Let's go to our confirmation entry candles here. Let's apply that. Yep. Take it right above there. That's the best we can do. All right, that's the best we can do. When you get caught up in the minutia of it all, so we got the full length of this consolidation here. Right here is your level, rally, drop, base, drop. Better level. But I said, right from the beginning, right, Kazi, I was like, whoa, this 5 minute zone is pretty jacked. And it looked much better on that 15-minute. So good example. Good example of how, TrendCloud is like, hey man, this looks kind of weird. Let's go over to gold. Okay, look, nice looking move on gold here. Wow. Every day we look at gold, guys. Every day we look at gold. It is going more and more extended. Every day we look at gold. Right? Does it hit? See how the signals, the TrendCloud signals work best in a trending market. So you got to really study what does the break of trend classical charting pattern look like. It looks like an N, right? So we get this break above the 50, pulls back, finds support, and as soon as we break above, see that? As soon as we break above, now we can start looking for those patterns to go long, those demand zones to go long. Okay? Everybody see that? Let's remove everything. Right? The pattern that we look for. Let's do here. Here, pulls back, finds support, and breaks. Breaks to the upside right there. Now we can start looking for our demand zones, right? Now we can start looking for our demand zones. Pulls back, finds support, right? And breaks above that. Now we can start trailing our stop. That's what Gary was asking about. How do we trail the stop? Pulls back, right? You can't move the stop until the break, right? Can't move the stop until the break. And then do like that. I know Gary had to leave. I don't know if he's still here, but that's how we trail the stop, guys. Pull it back. And so now we're waiting to move our stop loss. This right here, purple line, stop loss, pulls up, it doesn't do anything. In fact, it breaks to the downside a little bit. Oh no, we don't want that. And then it breaks to the upside, but we still haven't broken through this. So we can't move our stop. We can't move our stop until all this garbage here breaks to the upside. Now we broke to the upside. Now you can take this and bring it to the highest peak right there. Okay, so that's a good lesson in how to trail the stop loss. How to trail the stop loss. Does anybody want me to do that again or show trailing stop again? Let's go over to silver. Just let me know. Wow. Okay, so silver, unlike gold, went 7 waves, pulled back and recalculated, and now, okay, so now we're breaking back up to the upside. We got the TrendCloud crossover, right? TrendCloud crossover, broke to the upside. We've pulled back. We've got this TrendCloud signal here, okay? So anything in here would be, you're taking a chance. That's an aggressive entry in here, right? For the move back up. So we break through. We got to break through some structure, at least here, and definitely here, right? So we're here right now. Let's take a look at silver. Clear everything. High time frame, uptrend, impulsing up. Okay. So it looks like we've found support already, right? Broke to the upside, pulled down to the 50. We found support, and now we are impulsing up here. Okay. CCI is still a little weak, right? We want to see this. Once we see this, for silver, I would wait for CCI to break above positive 100. Okay, and it's going to break above positive 100 pretty soon, right? We've pulled back deep. We want a little bit more of a move. And as soon as we start breaking above positive 100, you can get aggressive and start taking demand zones with the the hope of breaking through there. So we can get in early on something. We can get in early on something in here, but CCI has got to break above positive 100. Okay. So we're waiting on silver. Platinum, little lower volume today on platinum. Where's our opening range? Let's get rid of that. Platinum. Okay. Let's get that 15-minute chart back up. And let's take a look. Okay, kind of in the middle, right? Clear the chart. Here we go. All right, well, look, high time frame uptrend. We're pulling back, but anytime you see your cycle indicator just bouncing around the top here, this is a bounded indicator, so it can only go so high. So when you see it bouncing around above 70, right? I have this on 70 and 30. When you're bouncing around up here, that's strength. Okay, so you've got some strength to the upside on this trend. You've got strength to the upside on the middle trend as well. And we're pulling back into the opening range. This would be a good opportunity here. Recalculate the chart and really take a close look at this. Okay, so we see on this 15-minute chart, wicked moves, right? That's a real big zone. That's a real big zone down here. We do have a rally base rally that broke structure right here. And this candle sort of just tapped it already. Let's widen that up so you guys can see. See how we tapped that right there from wick to wick? Pulled back, that's inside of the opening range. And then we've got the last bit of this drop base. So this whole thing, look how wide that is. This candle here, this leg in, has 1, 2, 3, 4 basing candles. These are all inside of this leg. So these are inside candles or basing candles. We've got a formation, and we've got some structural points here, right? We've got the previous day's high. We can put Fibonacci on here. Swing low to swing high. And we've got some ratio confluence right in this area here, right? We've got some ratio confluence going on right in here. Right in there. Might be a good spot. Might be a good spot to take a chance. Buy one. Okay. Where are we at here? 265, too expensive. If we wanted to take the full zone, we're going to have to bring this down like this. We'd have to take a chance like this. There's your $200 risk. Full zone. It's got to come in here, right? Get stop, hit our entry right at the bottom in that sweet spot there, and then, reverse. Okay, so if we want to get in on that previous day's high, we would simply have to, do we make it? We do. We just make it. We just barely make it, okay? We just barely make it. In the trend cloud, does the top red line and bottom green act as curves on? Oh, yeah, right on. Yeah, because it's used as a support and resistance level, right? So great question, Kazi. Yeah, so right here you can go like this, and you can say the corrective move on platinum here could pull down into this area, right? And what you would do is you would look for on your lower time frames, and look what we've got. Look what it did. Right? Right in here, right? Look at this candle. Zip right down into right? Rally base rally. Pulled right back into that, right in the middle of the trend cloud. It did it right here. Right there. Boom. Did it right there. Pulled right back into there and then continued up. So maybe it does it again. So that would be your high time frame curve right there. Totally. And we've got a level of imbalance on the middle time frame here, right? We've got momentum with us when it pulls back. And if you're using structure, right? Here, this is also the trend cloud. This is your line in the sand. So down here, we've got this, right? This rally, base rally that broke structure right here. So we've got a 1 hour zone, a 1 hour demand zone in the middle of the high time frame trend cloud. And we've got this rally, base rally right at that market edge, that line in the sand. So yeah, excellent. 1036. Wow. Not, what happened with did it not? Oh my goodness. Look at that rejection candle. So here's a situation where it's kind of in the middle, right, guys? I think this is just a situation where it goes a little bit higher than usual, right? Goes a little bit higher than all these wicks and then reverses, but the level of imbalance, okay, the level of imbalance is in here. It's right at that 50. And here's also, right? Previous support becomes resistance. Previous support becomes resistance, and that's what we're looking at here. We've got the previous day's opening range is right in here. You know, so is it here? Is it here? Or is it here? Right? Rally base drop. Tighten everything up. We don't know. You don't know. You don't know what's going to work. It's not your job. All you can do is, you know, use the candlesticks, take a small risk. Remember, small risk, big reward. That's what we're looking for. It's possible this thing pulls back up into here, into this rally base drop area. And this is what we wanted. This is the zone that we really wanted. But it really is, it's really this full Monty right here. We've seen that happen so many times, right? It pulls back up into the previous day's opening range. For the move back down. I think that's a good risk. I think that's a good risk right there. We'll see. We'll see if it happens. Copper. Oh, look what happened with copper. Uptrend. Let's get rid of all this. We're in an uptrend on that high time frame. Corrected back, right? Here's the correction. Corrective move. Corrective move. And now we're impulsing back up. Impulsing back up, right? Being represented here. Corrective move. Impulse back. Deep correction does not break below -0 or -100, right? Does not break below -100. But it did pull up. So we might be, right? So it's definitely, we are definitely to the upside here. So this could be a nice little bear trap, right? Because we've got all the trend is to the upside on both the high and middle time frame. What are we looking for? We're looking for a breakout to the upside, right? Well, we've got this deep pullback. Well, this is probably some kind of bear trap, right? And it did break through structure a little bit. It did break through structure a little bit here, which, and now it's finding, it's kind of pinballing back and forth on that middle time frame. All right, so TrendCloud's given us all the information. Do we take a chance on this? Oh, copper's really expensive. Copper's pretty expensive. Right? Pretty expensive. But that would be your that'd be your trap. That would be your bull trap or bear trap, I'm sorry. Right? Upward trend, strong, impulsing up. right? Momentum is, this is showing you the pullback here. Deep pullback on the middle time frame, but we didn't break through. We didn't break through negative 100. So we're kind of in the middle here, going sideways. Maybe we get that pullback, right? Maybe we get that pullback right there for a move up. $10.42. So everything's kind of sideways here. Let's go over. Oh, what happened here? Let's see. One of our examples made it. Oh, look at this. We're in a trade on the Canadian dollar here on a zone we drew out, and we're already up over $840, guys. I totally missed that. Let's go over it. So we took a legit trade. Here's the supply zone, right? This turned out to be downtrend on the high time frame. Candles are red. TrendCloud is red. We're getting some confirmation entry signals down. And it went extended, right? So we got this extended trend on the high time frame. So we have to be careful. We're impulsing down. Momentum is down. Where's our zone? Well, we drew it out like a couple of days before, right? This happened just today. It pulled back in. So when you're in that sideways movement, right? And here's your there's your target, right? Right at the base right here of the candle. It just hit our target right there. So this is how you would trade a sideways movement, right? We said, wow, okay, we're sideways here. We are going sideways. There's the full swing high to swing low on Fibonacci, and it kept pulling back and hitting this drop base drop. And what do we have inside of this drop base drop? We've got 786 retracement. We've got 618, right? We've got all of that inside here on that high time frame. And it was doing this: break to the upside, break to the downside, breaks above positive 100, breaks below negative 100, breaks above positive 200, breaks below, almost breaks below negative 100, and just keeps doing it, right? Sideways movement, that's the only way. You can only take a risk. You can take a risk on your sideways movement, but it's going to be extreme. It's going to be extreme, okay? So we took our $180 risk, and our stop loss should go right above, right? We should be out of this trade, really. We should be out of this trade right there, because we are in the extreme level here, right? We pulled into the bottom part of the zone. So this is a sideways movement. This is a sideways market. And the way you play the sideways market is by taking the top supply zone all the way to the bottom demand zone. And this is always going to be wonky. This is going to say, when you're in this area, when you're in the supply zone, it's going to be above positive 100. That's a violation of our trade plan rules, right? For trend trading. If you're going to trade the sideways market, then this is not going to work, okay? So you're trading it from the supply zone to the demand zone to the supply zone, and back. All right, so you get, this is the classical charting pattern right here. And we've all seen this, right? So there's a perfect example. There's a perfect example of how to trade that sideways movement. And it was, in this one was profitable, right? So this one was very profitable. We got so caught up talking about other stuff that we forgot our trade. And that would be a set it and forget it type of trade, right? Target down here. So we really should be out of this trade right at 900 because that's right at the base of the candle. So that's our target right there, and it's pulling out. So it's just starting to pull out of there. Let's watch us get this. Momentum is to the downside here, right? So we really like that. We like being below negative 200 here. But in a sideways market, again, it likes to do that. Extreme break below, extreme break above, extreme break below, extreme break above. This is what we are going to look at. And it might, on the CCI indicator, start doing stuff like this, right? So you see how it could start making higher lows, right? Here's your low, higher low, higher low, higher low. Pay attention to that. Definitely pay attention to that. All right, so nice sideways action here on the Canadian dollar. What else? Let's go over to the Japanese yen. Look at that. Remember when I was talking about the double top here? So here we go. Broke to the upside, right? Broke to the upside, and it did close. It did close above this high. So we've got a new structure high, and then it just ripped back to the downside. So you see, Japanese yen, they are selling the rips. They are selling the rips on the Japanese yen. And there it is. Take off that opening range. We don't need that. My goodness. Notice this, okay? Notice this. This is what you look for on the Japanese yen. This candle here. This is a continuation candle, okay? On the Japanese yen, when you see you're in a downtrend, this is the strategy to follow on that Japanese yen, guys. When you're in a downtrend on the Japanese yen and you see this wicking candle here, this huge wick candle, the next candle, you should start looking for your entry to go short, okay? Just like here. Wicking candle, look for the entry to go short. Okay, then you've got all of this right here. Wicking candle, pulls back more, and there's your short, right? Downtrend, big wicking candle, next candle, look for your short, okay? This is an observation that I made on Japanese yen, and this is a representation of all the sellers coming in, okay? So when you see that, you've got to take advantage of it, especially when you see this. It's starting to break to the upside, and then you get that. You start seeing green wicking candles like this, bearish candles that are green on your trend cloud on the Japanese yen. Man, you get some big moves down, let me tell you. So we didn't get a major wicking candle here, but we broke through structure, right? We broke through structure right there. So we can start looking for our TrendCloud resistance levels, right? Right in here. Drop down and look at that. Okay, so we've got our middle time frame TrendCloud right in here. So let's refine this. So now we'll go to the lower time frame and see what we can find in here. And you know, it doesn't really look like anything spectacular. We've got this little consolidation here, right where we broke through structure. But here's where your TrendCloud resistance levels are, right up in here. So we may get this big wicking candle into this, right, into this area, and then the move down. And we've got it right here. We've got one right here, right? So now it's like we've got to look for another candle, because on the Japanese yen, what happens is, you know, you get like this, and then you get this thing, and then it starts going down again. So very, very interesting currency to trade. Very interesting currency to trade there. Let's continue. Canadian yen, Canadian dollar. See, it pulled into that. It hit our target, and we weren't watching it. It hit our target, and now it's starting to leave, right? Because we are going from extreme to extreme. We're going from extreme to extreme. So we've got 765, you know. We want to at least make our, you know, $700. Wow. We gave away $200 there. We gave away $200 by not watching it. See, lower time frame. Look what it's doing, guys. We might walk away with only $700. We should have $900 in our bank account right now. We should have the 900. Let's put our confirmation entry candles. Yeah, look, we're forming a green confirmation entry candle on here. We just came into that high time frame. We got that green confirmation entry candle. This is probably wanting to start to make the move back up into that extreme level, right? Probably wants to go back up into this level up here, right where we got in. Gave away $200. We gave away $200 there by not paying attention. All right, Swiss. Okay. All right, high time frame, 4-hour chart, TrendCloud's down, impulsing down with momentum. It pulled back, right? We went extended on that middle time frame, pulled back, recalculated, and what did it do? Broke structure right here. Beautiful. And look where that is. And we've got this right here. We've got a drop-based drop. Here's our trend cloud on that middle time frame, right? Let's get rid of this. Clear up the chart so we can see our plan of action. Here's that middle time frame trend cloud, and what do we have? Well, right, we've got this right here. So we got this is better than this because this happened above, this formation took place above the break of structure, and we've got a TrendCloud component to it. So this is the better zone here. Sell. I think we can get 2 of these. Yeah. Or maybe not. Okay, we can take a chance on that. Possibly there. Pulls back, hits, makes some money. There we go. Was that? That was the Canadian. Yep, that was our Canadian trade right there. So it is starting to make its move back up to that extreme level. It's starting to make its move back up to that extreme level there. We're going to do like that. Put everything back. Just like that. So that's how we're going to play it. That's how we're going to play it, guys. That's how we're going to play that Canadian dollar. So cool. We walked away. We made $700. If we were paying attention, we would have seen that target, and we would have had that. Well, we left $200 on the table there, and a small scratch, a small ding on that micro crude. Small ding on the micro crude. Let's just check it one more time. All this consolidation, and there you go. It just squeaked above. It just squeaked above that that zone. Just took us out and said, "Okay, now I'm going to go." So when you see stuff like this, and on the 5-minute chart, yikes, right? That's just a bunch of sideways movement there. We boosted it up to the 15-minute chart, and we saw, oh, okay, here's a rally-based drop that actually broke structure. Let's take a chance on this, right? So that was the better move. There's your full zone right there. There's the full zone. So we're still safe. Can we do 3? No, can only do 2. Full zone on that drop-based drop on crude oil hasn't hit there yet. Maybe it hits during the night and ends up being like that Canadian dollar, where it sort of very slowly kind of moves in here, boom, hits, and then starts making the move back down. Right? Classical charting pattern, head and shoulders. That's my prediction there, guys. All right, guys, I'm going to go get something to eat. I hope you guys had fun. I definitely did. Looking at patterns, we made some money. We used TrendCloud. Remember tonight, last day, the Halloween special ends. So jump on that. You can get the full course and the full TrendCloud system. It works, guys. You can beat any prop trading firm strategy. These guys, as Dan was saying in the chat, they really want you to fail. Well, screw them. Use TrendCloud, get funded, take their money, and start trading with it. So good luck, guys. I will see you tomorrow, same time, same channel. Have a good one.